You could be making a huge mistake by thinking the best thing to do is refinance through your current mortgage servicer. And I get it. They make it seem like they're the easiest, most convenient, and cheapest route. And I know that they're overwhelming with their solicitations for you to refinance directly with them. I am going to give you three real life examples of why that is not the move for you to make. Here is example one of why you should not refinance with your mortgage servicer. So, this borrower was in a 15-year loan with a rate above 6%. They got a very enticing offer from their current mortgage servicer with a interest rate offer with a four handle. That's right, under 5% on a 15-year. And why wouldn't that entice them with a significant amount of interest saved? But this is what was not disclosed to them. It took all the way until time of the closing disclosure where they were informed that to get this 4.99% rate, it would cost them 3.731 points or percent, tens of thousands of dollars not disclosed or mentioned until the end of the transaction. That's right. The initial disclosures went out without a locked loan disclosure. And the first time that the interest rate disclosure of a locked rate came was on the closing disclosure. This is a classic maneuver called a bait and switch. The lender is banking on the fact that you are going to feel like it's too late to turn back and just proceed with the new offer given at the end of the transaction. Well, luckily, this borrower didn't take that stance and they called me. We were able to get them not only a lower rate than offered by their servicer, but also at significantly lower cost, locking them in to a new 15-year term at much more affordable costs. Make sure that you are not someone that gets bait and switched by your mortgage servicer. Here is reason two why you should not refinance with your current mortgage servicer. And in this case, the borrower has a unique employment situation. They work for the federal government and they are in intelligence. And no, I am not going to say too much. And yes, it is classified. These situations can come with a level of privacy where you don't want the public to know certain public information. And in this case, the discrepancy came down to an address history. So this borrower started his refinance with his mortgage servicer, and let's just say things didn't go according to plan. The mortgage servicer just couldn't grasp certain aspects of his employment and address history, which left the borrower extremely frustrated. The final straw came when they asked him for a receipt of payment to a gardener on a home from 4 years ago that he didn't even own. What? I don't get it either, and I would be just as frustrated. The biggest hurdle in me taking over on this refinance was convincing the borrower that all that information requested by the servicer was not going to be necessary in dealing with us. We did close on his refinance, simple and easy, and got his family the necessary savings that they desired. Save yourself the headaches. Don't start your loan with your mortgage servicer. Start with someone that can address issues before they become problems. Here is example three of why you should not refinance with your current mortgage servicer. And in this example, we will just say that not all appraisers are created equally. In this example, an investor bought a home about over a year ago. They put money into renovating that property and now have it rented. Their goal: refinance, pull cash out, and use that to invest in more real estate. They started their refinance with their mortgage servicer on the promise it would be simple and easy to do so. The only problem there: when the servicer ordered the appraisal on his investment property, the value came back significantly under what was expected and only minimally above what the investor bought the home for over a year ago, taking nothing into account for the renovations made. When you work with a lender like myself, who only trusts local skilled appraisers to be on their appraisal panel, you can ensure that you are going to get an appraisal report that understands current market conditions and adjustments. We ordered an appraisal for this borrower, and the value came in over what he expected. He was able to get even more cash than he previously thought, allowing him to utilize that into his next real estate project, as well as lock in a lower interest rate than his servicer had offered. Don't trust someone out of your market to understand what is happening in your market. The best time to get the best deal when purchasing real estate is in the winter months. This, according to Lending Tree, buyers get up to 8% better deals, or $23,000, when they purchase in the months of November, December, January, and February. Homes sit on the market for an average of 75 days when listed in the winter versus 48 days when listed in the spring. Yes, inventory is tighter on homes in the winter, but you can still find some very motivated sellers and far less competition from other buyers. So, smart home buyers, get motivated. The best time to buy is right in front of you.